Hello everyone. Well, after several days of focus on what the Fed is likely to do, yesterday was the turn of the ECB. We heard from 3 ECB members, all of whom reiterated the Council's recent line. For example, Benoit Coeur said that the ECB's stance will remain accommodative for as long as needed, and that the ECB has an open mind about non-standard policy tools, which pretty much sums up what most of the ECB Council members we've heard from have been saying recently. Coeur, the ECB Council member responsible for money markets and for executing ECB monetary policy, also made the important point that the ECB is watching the entire term structure, not just short rates. This tied in with ECB President Draghi's comments. He said later in the day that outright monetary transactions, the ECB's pledge to buy up the bonds of troubled countries if necessary, quote, is even more essential now as we see potential changes in the monetary policy stance with associated uncertainty in other jurisdictions of the integrated global economy. In other words, the ECB stands ready to depress long-term yields if necessary to keep the Eurozone economy on a recovery path while the Fed tapers off quantitative easing, which of course is likely to push up yields in the US. Now, given the relatively good correlation between euro-dollar and the real 2-year bond spread between bunds and treasuries, this suggests a lower euro-dollar going forward. The single currency could come under some pressure as early as ahead of next week's ECB Council meeting. These dovish comments, combined also with yesterday's better-than-expected U.S. economic data, to drive euro-dollar lower to notable 130.75 Fibonacci and 50, as well as 200-day moving average support. Now, having broken that 130.75 level, we've entered an area of concentrated past price action that holds until 128.75, which is my near-term target nowadays. Fibonacci resistance comes at 130.75 and 131.15, with weak support